All righty. TGIM. Doc here from North America. It is Monday. Hooray. We had a 2-day weekend, just a regular weekend, but it was all good times, you know. It was very interesting. A lot of politics as usual, the whole thing. Very confusing situation with the bizarre thing with the speaker's husband. 5 lingering questions about the bizarre thing. We're not even sure what is it all about. No, it's making a lot of sense. Classic, 2 weeks before an election, they do something really weird. And, it just, what else is new? Let's see, the Nick I think, took a little smack going on. We should take a look at that. Let me just double check. And, there's just a lot of frustration with the Nikkei, I think, overall. Let's see where it's at. Let's put that up on there. We have the dollar index. You can see the dollar, just a quick, statement there. Dollar is lifting. Hey, Robin, good morning. You can see it on, J4X there. You can see 2 greens. It's trying to push up. And you can see over here on Chicago Comp, we got 1 green, and it's trying to push up. But we're not in the daily buy, so. And we closed in a weekly sell right there. You can see that. So we're not exactly we're figuring that this course of direction is probably going to stay for a while. But let's just take a look at what they did to the Nikkei. Just a quick peek. Because, we've been watching how Switzerland and, the Swiss franc and the Japanese yen has had its issues, It really has had its issues, and it's definitely well worth paying attention to. Let me just see where the Nikkei is. I just saw the headline about I'm not sure which department, but they basically said, okay, yeah, you can see the strength there, and it's still unchanged, I guess, for today. And we're in a daily buy for 2 days, and you can see we've been in a weekly buy since, we went into it last week, and here we are this week right there. So, it says, did Nikkei leaks just kill the dovish Fed narrative? Something's coming out of there. In other words, there's no doubt. We didn't expect to see the yen get up to we talked about it getting up into the low 150s, and it did. But it's still, it is surprising to see it run from 110 to 150. We're looking at 35 and 40-year highs. It's a pretty dramatic move. And at the same time, we see the same characteristics coming out of the Swiss franc. So between the two of them, GM to you too. And, you see how I look over to see the chat line, and I just saw the GM. It tells you how fast I am. I don't know when you put it up there. It just shows you the this whole situation that's been going on. They're both functioning on some level. Now, we know what's going on in the Swiss. At least we think we know. And that what we think we know is that Swiss Bank of Swiss, what's it called? They spell it oddly, Swiss, but the private investment bank is having problems, and so we see the stock trading in the $4.5-$5 area, and there's talk of a margin call out there, and we've seen the Federal Reserve lend the Bank of Switzerland itself about $9 billion. We're figuring that looks like about what they need for the margin call. So they're trying to put it behind them already. In other words, they want to get this done and over with. So they're propping up the Swiss bank itself, not the central bank, the private investment house. And there's talk of possible slicing it up and selling it in a couple parts, but unfortunately it's not a $30 billion bank anymore. It's more like a $5 billion bank. So that's got a lot of people freaked out. You got to figure that when they were at $30 billion, you have to think just like Lloyd's of London and all the others that went under, that is this just another Walking Dead, and we just didn't really pay attention to it. We see Deutsche Bank is a Walking Dead, and Lloyd's of London is a Walking Dead, and Citibank in New York is a Walking Dead. If it wasn't for the central banks, they wouldn't exist. They just can't even hold up. So, I mean, that's that seems to be the whole gig of it all in the end. So, it you know I guess the best way to say it's interesting to see. It's interesting to see how they go along or function or. It's I'm trying to find the right words. It just shows you that there's a lot of issues out there in the financial world, and they've never been cleaned up. I was explaining this to somebody over the weekend. I said to them basically, all these companies went out of business, but they were propped up, and their chairs and so forth are still running the place. So the same policies, poorly managed, since 2008. So what is that? 12. That's 14 years. We see bad management still in a lot of these places, and some of them, like a Citibank, has never really recovered. A Lloyd's of London can't recover. The same situation. None of them can recover. Or Deutsche Bank can't recover, and now we know Bank of Swiss. And I guess that's the end of my riff. All right, let's get going back to the products themselves. Let's get back over to the dollar index. And then we'll jump real quick. Just a quick glance at it again, And there it is right there. All right, and there you can see it there. You can see the dollar index. Again, J4X trying to lift up. I'd like to get rid of that automated contract thing. I don't know how we get rid of that, but I would like to get rid of that somehow. What happens if we go like that? Why can't we get rid of this? I don't know, we'll have to come up with something and rebuild this whole thing. What is that? See, it doesn't. Submit order, cancel order. No, I don't want to put any order in. All right, so you can see here a green line is trying to bounce up. It's doing fine. You can see the hinky Ashkeys. Let's see. Answering somebody at the same time. There we are. And so what you see there is, it's trying to lift, and you can see the same thing going on in, just shrink this down. Where is it at? Right there. You can see it right there. It's trying to lift here. We'll see. I'm not convinced the dollar. I think the dollar's probably met its peak. I kind of doubt it's. I don't think they're going to run it anymore. There's not much of a reason now. Interest rates should be starting to be, when speculated on, more than likely they're going to find a way to bring them down more than bring them up, I think, at this point. All right, even with an 8%, you got to imagine most of that inflation number is just bad policy. The change of policies alone will straighten a lot of that out. So. Oh, no. New York Jocks lose. Oh, wow. Okay. Anyhow, now let's go over to the euro and put the euro up there and see what's going on with that. Where's that mouse at? Right there. And right there. And there you can see the euro in itself for a second day, pressing down, but the weekly held up. Let's put it over up on J4X. Where's that? There it is right there. There we go. And there's that. There we go. And you can see the same thing on J4X, a couple reds. It's giving pressure. There we go. And so when looking at the euro itself, this how many years did we hear people talk about the idea that they were going to, when is it going to go to par? When is it going to go to par? No, it's 1.00. And now you can see it's sitting at 99.18 as you see it on J4X. And it's hovering around the 1. It's going down to 95, 96. Let's see, right there. Let's just send that. We see that on both of them. It's dancing. But notice, I guess the confirm more than anything else. Let's take a look at it on a weekly basis. The euro on J4X. Where's that mouse at? There it is, right there. And let's just put the weekly in there and see how that looks. Is it lifting the same as ours? Yes, it is. See, it's been pushing up too. Lots of green here. It's been going on since this big slide from here. I went into a green here and it just got crushed. But it's been pushing up, and it's getting back up to where it started from, basically the par area again. And what else can we say about it? I guess just the fact that that's what they're doing. I mean, they're just trying to lift it up. And again, when you're trading at par, and everybody for decades now, have been looking for par. It must be a real good fixed battle at this point. A friend of mine's going to Paris in a couple of months, and I said to him, pick up, 5,000 or 6,000 euros. Do it now, because at 99 and 98, it's probably a bargain. And then what'll happen is that when you get over there, if it's trading at 110 or 115 again, because we're running right, figure that that's what's going to happen. All right. So from there, let's go over to the cable, which I've been impressed. The cable's been acting pretty firm for all the changes they're going through. I mean, it is heading into a daily sell today, but it's held up pretty well during that election situation right there. It's gone from the 110-ish area to the 116, was it? Yeah, 116 and a half area. So that's been very impressive. And that is really the answer to it all. And you can see a little pressure here today. But you can see it also has, closed in a weekly buy last week. And we'll see how long it lasts for that. I myself am surprised with all the calamity that they have going on that we're actually seeing this type of strength in the product. But, in a QE world, anything's possible. I mean, really, when you think about it. I mean, quantitative easing, it's awful hard to define fundamentals or justify central bank, not central bank, GDP and Bureau of Labor statistic numbers. I mean, none of it has a great effect, on our markets, because the central bank has the power to just, we had, I'm going to repeat myself. We had a central bank for, 50, 60 years. It pretty much only showed up like once a quarter. It was very rare for it to jump out and get involved deeply into anything. It wasn't until the 60s they really started to, when there was a threat to the gold standard, the United States had to move off the gold standard. Charles de Gaulle was threatening to exercise a fixed amount, and the U.S. Treasury and the government overall had an opinion: never allow our gold to drop below a certain percentage of the world. And when it looked like he was going to do that, the British and the United States jumped in and suggested that they switch out of the gold standard, because nobody else was really, adhering to it, I guess, on some level or another. At that point, it was probably a form of desperation in general, just to, to hold that stuff. I mean, we're not really. I mean, at one time, obviously, gold was so much different, but then now that we have listed options and so forth, and a whole different game. It's just a whole different process. There you go. And that is the answer to that. So now let's drive, put the up on J4X, let's put the cable also at the same time. Like I said, it is surprising me because I'm usually a bull in cable. But you can see it's curving over here. We haven't generated red yet, but it's getting there soon. And you can see we've already started it here on Chicago Quant. But we are in that weekly buy, and we'll see what they do with that and see what kind of motivation there is. Again, in the era of QE, it's awful hard to really take any of this physical, fundamental, numbers and take them serious. I mean, they influence people because the funds have to move their positions a little bit, but it's not what it was before QE. Let's put it that way. It's definitely not even close. It's not even remotely close. So, all right, from there we jump over to, we go to the Swiss. There it is right there. And you see Swiss is lifting up again, heading back to the par. Let's get it up over here. Right there it is. And you see there doing the same thing. It's the second day in the daily buy. And you can see the weekly never even remotely shifted. Same thing with the yen. That's why we'll do the yen right behind the Swiss. And that is that the Swiss not really taking... I mean, you can see it is below the manifold here on the Chicago Quant. You see that right there. And you can see the echo, I guess we call it, the blue dashed lines that we play with at times. Or watch. It's kind of like an echo showing weakness. And you see it banging along here, and you can see it's trying to lift again, but it's failing at it. And then the echo gets through here, and then what do you get? You start to get some real increased volatility and movement on the upside. And then when it tops out here, it's pretty much near the highs. No doubt that's higher and that's higher. And you can see it's trying to drive itself. And once it gets through the manifold again, the blue dotted, it starts to really break down. So, and we call that the echo because it's a gas line 5. So you're seeing gas line 3 when it comes to the green line and the histogram, the white histogram. But the gas line 5, I think it's a plot 1. That's what it is. It's a plot 1. Just like the histogram is a plot 1. But it's a 5 instead of a 3. And that means it's just a 5 average versus a 3 average of our mathematics. So it shows you, and in the histogram, the manifolds here, they're one standard deviations of our math. That's what they are. So that's the challenge to the standard deviation concept, and the lines are representation of moving averages. Only you deriving it from a different center point. And so there we go. And from there, we jump over to the yen. And there's the yen, and you can see yen is... Did it get through? No, it didn't get through it was a negative on Friday, but it is... And it gave us a volatility signal with a red and a green. Now you see the strength starting to kick in right here. And we are trying to get into the daily buy as we speak. Also, same situation with the histogram and the green line. In this case here, it's even firmer in many more ways. The histogram has been underneath the manifold for days. I'm sorry, weeks. For 4 full weeks. This is the 5th week. And it kind of picked out the top of the market. You see it breaks down. It's telling us that there's weakness, but not enough weakness to drive it into the minus. That's the fascinating part. Not enough to drive us into the minus. So that's the that's the real answer of it all. That is the answer to it all. All right. From there, what do we do from there? We jump over to the, we did the yen, we did the Swiss, and so now we go and take a look at the Turkish lira, and then from there we'll go over to the dollar, the Canadian dollar, that is. And let's take a look at the Turkish lira, and there's the dollar Turkish lira on Chicago Quant. Let's put it up on J4X here. Let's see, where are you? Right there. There we go. You can see it's been trying to lift for days. It's vacillating at the very high end of the range. Not but the low high end of the range, 75. 80 is the supposedly the pinnacle, and it kind of tops out a lot of times in the 85 area. And as you can see, this widened this a little bit. This is now 39 weeks in a weekly buy. Yeah, the bigger question is this horse race going to go on for the whole year? Or 12 full months more, into February of next year. Now you can see here, let's see, widen this. This is because of this wild action, this illiquidity that we see now in this product. I'm going to make it really big so we can emphasize it a little bit better and bring it down. There we are. So you can see here, went into the buy, went into the sell. In this case here, it was a red and a green. So you couldn't get into the buy there, and it's still in the sell. And today, it is flirting with the buy as we speak. It's trying to get it in there. Now, there's no real wild moves. I guess Friday they had some action. We had a range between 1865 down to 1830. Big moves, for a product like that. Compared to some of these whack position in trades where they've punished somebody, they've hurt somebody, there's no doubt. They made them buy or sell at some ridiculous prices, which is really disappointing. That's the currency market, of course. Normally it is a very solid, very liquid area to trade. But in this case here, when you get into what we call the cockroach hotel type of pairs, some of the weakest or the most damaged, and boy, if there's been anybody over the last decade that's damaged, is obviously the Turkish lira under the government that they've had now for 10 years or so. We've seen the product go from 1 to basically 21 against the euro. We've seen it do the same thing with the dollar, 1 to like 19 and a half or 20. So it's pretty bad. That's not a healthy. What's the way I can describe that? That's not healthy. It's definitely not healthy. It's bad. Can't say it enough times. It's bad. You don't want your currency to fly around like this. All right. From there, we jump over to what we usually consider the better of the two, and that is the Euro Turkish lira. Right there. It's funny, which is so weird, is that they literally are trading, almost at parity with each other all the time now, and that alone is like a major warning. For a long time, there was always like a 3, if Euro Turkish lira was trading at 18, more than likely, the dollar Turkish lira is trading at 16 and a half or 16, something like that. It's gotten really weird now where they're just basically trading at parity, which is a sign of a massive volatility and a sign of a lack of confidence. That's what that stands for. We've seen that too many times over the decades where products do that. They get to a point where they can't trade healthy whatsoever. In this case here, you see it there. Did we get into the sell on Friday? I don't think we did. See, it was at 0. See, plot 4 is green, plot 1 is white. See the little box there? They were zeros across. So it didn't do it. It had the red setting it up. And then you can see it now is playing with the daily sell. And you can see the weekly is trying to roll over after lifting finally into the buy last week. But then again, look at some of this insane illiquidity in the product. So, it's like, what do they call it? Dealer's choice. That's what it comes down to. Dealer's choice. All right. So now, from there, we go over to let's see, the Canadian. And Canadian kind of always shows us a flavor of the oil market, and because it's on North America. So we've noticed the Mexican peso and the Canadian do have more stability than any of the other pairs trades around the planet. when it comes to the dollar. Well, we don't watch the Zloty dollar pairs trade, but we do watch the Zloty euro pairs trade, and that's really stable, very stable. Matter of fact, I'm amazed that their interest rates are at where they're at. I'm surprised they're not lower. Because if I was running a bond fund, I would be buying Zloty all the time. I would be buying the bonds too. I mean, they're up in the 8 percentile. They're actually functioning right. They are. Inflation's at 8%. They're trading at 8%. What a efficient economy that is. You can see here, CAD is moving up the last day and a half. You got a little volatility signal there. And you can see at the same time, it didn't make it into the buy on Friday, but it is doing a fine job there. And at the same time, we get the whiplash. We got it playing with a weekly sell finally. Let's just widen that out, and let's put a little circle around it. Right there. And there's the weekly sell that it's flirting with. Right there. There we go. And that's the action we're seeing in Canadian. So what we do normally is we go over to let's go over to it. Let's put it up on the J4X. There's the Canadian. We're going to put oil up there, not Canadian, and then we'll flip back and forth with both of them. So where's it at? Right there? Yeah, let's do that right there. CAD. And we go to oil. So there is light sweet crude out of Texas, the front month. See the pressure on it. Normally, as Canada is going up, oil finds a way to go down in cost. In other words, so that's why we're seeing the strength. In other words, it's losing value against the dollar as it goes up, and when it goes down, it's gaining against the dollar. And of course, as you can see on J4X here, the overall push has been to come off these lows and climb. And that's why we see the strength in it up until here. Or I guess that's why you see the strength of it failing here, right there. And you see the pressures on the downside. Not a lot, just a little there, And then what we do is we flip from there to the oil market. Right there, there's the front month. And what do we see? We see pressure. And we are in a weekly buy for 3 weeks. This is the third week starting. And you can see where daily is just feeling the pressure there. And it's down. It was down on Friday too. There was pressure on it on Friday. All right. Quiet day. No one's saying anything. It happens like that. Okay. From there, we drift over to gold. And we're going to put, we'll do this too. Let's put Canadian up on here just for a real quick look. Where are you? CAD. Dollar CAD. Right there. Yeah, see that bounce going on up there. Just like in Chicago Quant. Oh, wait a minute. Let's go like this. Just like in Chicago Quant. There we go. Just like that. There we are. Now, let's go over and take a look at the South African Rand. We'll put the South African Rand on in Chicago Quant for the moment. And then what we'll do is we'll go take a look at gold. And just looking at it there, see how it's climbing these last 2 days over in this area here? Or no, right there. There it is. It's climbing, and it's trying to climb into the question is right there. And it's heading down a little bit. We're seeing some pressure on it, trading at 1636. That's the spot. We followed DEC December. And let's put that up on Chicago Quant right there. And you see the same thing from the Friday sell-off. We went into a sell on Thursday. Nice slide on Friday. And a little more weakness again today. And you can see that the 2 weeks of being in a weekly buy is choking and rolling over again for the moment right there. And then we'll put the South African Rand up on J4X. There it is right there. You see doing what gold is doing, and that is gold is going down, and South African Rand is trying to go up. Exactly. And that's that rhythm that goes on, That's the flavor of it all. from there, what else can we say? From there, we slide over to. Let's see. So we did that. Okay, we go to the Mexican peso. We go to the south of our border, and then that kind of finishes us off, doesn't it? Yeah, we did. We did yen. We did. Did we? Yeah, we did the yen right after Swiss, didn't we? I don't think we did yen. Did we do yen? I'm starting to wonder now. Let's do this. Let's go over to the yen, and then from the yen we'll go to. I like to do yen nowadays right after Swiss. There you go. Okay, so you can see that. Yeah, see the Swiss is. This is the yen now, trying to lift up just like the way the Swiss is, and let's put that up on Chicago J4X. No, Chicago Quant. There we are. Right there. You can see the same thing. Volatility signal, and it's starting to lift. And I think we saw that same thing in the Swiss. No, we didn't. It just has 2 days in a buy right off. Okay, so they seem to march along. They must be. I'm not sure. You know, we always made the joke here in the States. We called Japan Japanese Inc. like it's a corporation, but it is. And how many corporations are commingled or downstreamed is fascinating. And so it's not as there's not as many independent companies, I guess. Maybe the little minor ones, which is always healthy. That's how you grow things. But it's not the like the United States market where there's new companies coming along and you have these new incorporations, and next thing you know they're taking over a sector. When's the last time somebody took over a sector in Japan? It's been a long, long time. They're all the same names for decades after decades after decades, always the same names. So, maybe one is on top and the other one is in third place, and then one year it's on top and the other one goes into third place or second place or something like that. But you don't see them going out of business or anything like that. You don't see new, companies dominating the car industry or the chip manufacturing or the TV industry or any of these other things, manufacturing of electronics. You don't see that. They're all still the same companies for decades upon decades. All right, and then from there we go to the south of the border. Let's take a look at the Mexican peso. It's been down at the bottom end of its range. It's almost like a measurement of stability, that the global stability in a sense when we look at those, because they don't have to worry about the military side of it. And so, like Europe right now has a war going on in the center of it, and it's one of its largest states in the breadbasket of Europe. We've got a small conflict, or an aggressive conflict going on. So, old Soviets refuse to go away. In this case here, we put it up on the Mexican peso here, and right there we go. You can see it's trying to lift, bouncing off of that bottom for 4 days now, just bang, 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 and trying to lift. It's been trading this range between these two black lines now for a couple years. They slip out of it once in a while, more on the upside because of like geopolitical stuff. Like Mr. Biden went down there, and next thing you know, the thing went flying up to around 121.25 or 121.30. But then it slid right back down again and straightened out and stayed inside the range. That was like almost 2 years ago now. Another sip of our tea. There we are. So that's pretty much the completion of our currencies. You can see also a second full week in a sell, and it has glided down, but it refuses to break the range. And we'll see if this little curve we start to see here, if it starts to get it back up to the 0.23, or it goes after the 618, or battles its way back to the, in this case here, it battled all the way back to the 5.0 for a couple days. It launched itself through the 0.38 for a moment, hit it, and then dropped like a rock by the end of the day, down to the 0.76. Wow. Talk about Fibonacci being accurate, From there, we what do we do? We dive into let's see. We'll go to our commodity side and see. Okay, so there's gold. So let's do the metals complex. So you see gold on there, and they're both moving down. Let's go to, where's it at? Silver. And there's silver. And you can see silver's trying to do the same thing today. Friday also, it's putting its pressure on it. Let's put silver up on Chicago Quant, and there's silver. It closed also Friday in a sell, whereas gold closed on Thursday. And you can see in this case here, silver never made it into the weekly buy. It flirted with it a couple times. I think this day or one of these, this week, I guess it's like 2 weeks ago now, it tried to get into the daily buy for a day or two, and we had some strength, and we went into the daily. I guess the daily buy was right there, and it jumped into the daily buy there, and we showed some strength for the whole week, and then by the end of the week, they found a way to push it right down again on the weekly. So they could not motivate this to get going in the upside there. Strange. Inflation? What inflation? It's transitory. That's what happens when you have central banks running everything. And we talked about the metals situation. What was it? On Thursday or Wednesday, about how much gold is in the vaults now and what's eligible. I mean, they've gone into a point now where gold is being stored there. People think, oh, wow, look at all that nice gold in the exchange vault. And then they find out that it's not eligible. It's not part of the COMEX. So it's like, oh, where's the gold? Where'd it go? Where'd the metals go? And they are definitely not around anymore. I think it's like 1 ounce of gold traded nowadays on the exchange floor. I'm sorry. Let's round it out. For every 3,000 ounces of gold traded on the exchange floor, there's only 1 ounce of gold in the vault that's eligible. Whereas before quantitative easing in 2008, if 3,000 ounces of gold traded on the exchange floor, there was 2,988 ounces. It was almost 1 for 1. Now we're 1 for every 3,000. Talk about extremes. No wonder things are so confusing in the metals market. All right, from there, we drift over to that copper. Oh, what happened there? It was a big day down on copper. Let me go to the exchange and get the right prices. The high was like so much higher. Let's fix that while we're here. Yeah. The high on Friday was $3.53. And here it's showing a high of $3.45. So let's fix that. And then you'll see what we see. Do 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 do. Yeah, real disappointing there. All right, it's loading up, and we're going to fix that so you can see it right there on the screen, because it's it's not good that we don't you just don't see it. So NYMEX. Let's see, what do we do here? Let's go with, is it NYMEX? Yeah, NYMEX. That's right there, HG. Go to the edit. I see the day before too was screwed up. The high the day before was 55.65. So they're showing it as a high of, oh, it is, okay, that's fine. Okay. I think they have the wrong close in there, that's what it is. Let's fix yesterday. What was it? The high was, where was it? That's not the high. Is it the high? No. Where's the high? The high was 55. Let's see, where is that? 55. Is it 57? Let's make it 58. Let me just go back to it again. Oh, I see. I see. The high was 53. There we are. And let's see if the settlement was. The settlement was right. 42.90. Oh, wait. What do we have there? We have a settlement. Yeah, that's not that far off. It's only, let's just put it in there right. 290. Hit OK. And let's see how this thing changes. Sometimes the exchange doesn't slip through. I'm not sure what they're chasing after. Maybe the closes of the futures contract itself. I don't know. Sometimes we get fed the exchange floor electronic stuff, and then what happens is that let's go there. NYMEX Energy. No, it's not energy. It is COMEX Metals. Like there. There we go. Yeah. So that was Friday. And let's put today in. There we go. And they're doing the same thing again today. They're pouncing on it. So you can see that pressure, and they've pushed the weekly back down again after just jumping into the weekly buy 1 day. Or 1 week, I'm sorry, 1 week. Let's save this. Save workspace, and let's just make a copy of it real quick. Come on, let me make a copy. There we go. And so that's the copper contract. Now I did look, I was curious, because I saw the weakness in the metals, and I thought instantly, let me go look at platinum. So I did. I danced my way over to platinum, and it was still firm. I was pretty happy about that. Let's just double check it again. Show it to you. Right there, and there's platinum. And it's holding up. That weekly is holding up. Let's spread that out. And you can see right there. It went into the weekly buy last week. It's holding up. We're thinking that we get into a daily buy in gold or silver. Excuse me. Probably going to be a good buy. Because that's it. I'm sorry. If their gold is back into the weekly buy, it's a good buy. And for silver, unfortunately, that thing has been in a weekly sell for 4 weeks, so it makes it very hard to try to buy that. Just don't be short. That's all I'm saying there. Unless you're doing it through binaries and options and so forth. Then you at least know you're not going to get stopped out. Put like a couple months on it, and you'll be fine. So from there, let's see. So we did all 4 metals. Let's shoot over to the energy sector now and take a look at that. I want to put Brent up there. Oh, and let's just show you copper real quick on J4X too, right there. You can see there's pressure on it, and you can see, look at that line. It's been pressuring and pressuring for like 3 or 4 days. Matter of fact, this whole little move was really hard, and you can see here it's still pressing down. Now let's go over to Brent and see what Brent's up to. Since West Texas down, you got to assume maybe we're trading in the 92s in Brent. Yeah, there it is, 92.55. They march along pretty well. You can see it's a second day with pressure on it. We put up the front month here. You see it was down on Friday, but you can see the pressure is only really filling in today, and we're still in that weekly buy. So we're not taking it too serious. And then we go to the February contract 3 months out. Same situation. It's pressing down today. You see that pressure right there, and the weekly is still firm again. So we're not too convinced of anything there. But you have to wonder if the markets have been interpreting or let's say anticipating the change of government here, which we've been talking about for a while. Then you got to imagine at the same time you're basically thinking, oh, okay, what if that change of government comes? What else comes with it? Oil. They're gonna start producing oil again. The United States we're like 3.5-4 million barrels underneath where we are normally could be, or let's put it this way, where we can be. So 3 or 4 million barrels added to the world market and to the United States in particular can be very influential, enormously so. Enormously so. All right, from there, let's do this. Let's go over to natural gas. Let's put natural gas up on J4X there. Right. I think it's there it is, right there, natural gas. Isn't it? No, that's the Dow Jones Industrial Average. That's not natural gas. Must be right next to it. There it is, right there. All right, so we're trading. It's been lifting. You can see the strength in the J4X. Getting a little crossover going on right here, up at the top end of the range. And at the same time, we slide over to natural gas on Chicago Quant, and right there. It's trying to get into a buy today. We got a volatility signal, but notice the algorithm is still minus, and the weekly is still minus from the $8 $8-ish area, $8.50 area, something like that. So that pressure has been on a long while. Gets into a buy here, goes sideways for a while, and rolls over again. But overall, following the weekly trend, has been the winner chicken dinner. Now from there we slide over to, we'll leave it up on Chicago Quant, and we go over to the Spanish company, and it's been trading in the 25s. We've seen it fall from 30 down to 22.5. Natural gas company, and now it's back up in the 25s, which makes us sad. Yeah, look at that. It's heading for 26 now. We're really seeing that pressure with the winter months coming into Europe and the pressure on that company. Uh-oh, what did they do now? Just saw a headline. When did this come out? This came out this morning, like at the London Open. EU has frozen 17 billion euros from Russia, oligarchs, and other entities. Ukraine officials say the funds should be used to rebuild. Yeah, I hear you. European stocks trade mixed. Yep, exactly. All right, so there's the energy sector. And from the energy sector, we take a look at the stock markets themselves and see what they're doing there. So the first thing we go to is we look at the S&P 500, which is the kind of like the world index. It is pretty much a world index. Almost 50% of the companies in it are outside the United States, and the other 50 are in the United States. So it's definitely a large percentage of foreign corporations. You see here it's been climbing really comfortably. No problems there. And we'll take a look at it over here. I think we're down a little bit today. We'll see in a second. Yeah, we're down just a little bit. We're looking at, let's see, we have an intraday. We can show you the price difference. So we're down 22 points today. There it is right there. Down 22 points. This is an intraday chart. Went into the sell right there. And it's still in it. Even when it tried to get into the hump and get going, it failed. And that pressure is still on the downside. All right. From there, you can see that. Now what we do is we go over to, where are you? We go over to the Dow Jones Industrial Average, which has had an incredible, the greatest month ever in its history. You can see that. I mean, it went from the 29,000 area at the beginning of October to almost the 33,000 area. 4,000 points, which is a big move. Was that like 14%? It's a pretty demonstrative move, especially when you look at the Tech 100, which is up like 4% for the month. The S&P 500 is up around 9% for the month. Or is it 8? I think it's 8%. And the Dow Jones Industrial Average is up like 14% for the month. Wow. And we've talked about this over and over again, too, about the industrials being the stock du jour at the moment. They are the one, there's the most most popular. And so let's put that up there. Where are you? Right there. And there is the Dow Jones Industrial Average. And it shows you how it started the month off under 29,000. And on Friday, it was above 33,000. What a fantastic move. Holding up in a nice daily buy for that whole move there. Been 3 weeks in a weekly buy. This thing is not giving up. It's holding on very firm and comfortable. All right. From there, we go to the weakest, I guess you could say, and that would be the Tech 100. That's the NQs right there. Also on J4X, see how it's playing with the 91 area, 92 area. It's getting really, really overbought on an extreme when you're looking at the two stochastics. Let's slide over here, but we're in a weekly buy, so until we see, the opposite and we start to see daily sells, we're not going to be too bearish on this product. Right there, you can see this is the Tech 100 trying to lift today. Oh, there it is. We got it there. Yeah, but we're still on the minus for the day. We're down. What is that? 84 points. Down 84 points for the day. Still, it went into the buy on Friday, and it's holding up. Let's put that line in there. Right there. So it's trying to hold its ground. We see it finally flirting with its week. Missed the weekly buy last week, but it's trying to flirt with it this week. We're starting to see some action in there. So we will watch this action and see. You see the Echo is well moving up, trying to hit the top of the manifold there, the plus manifold. So we got some buying going on in there, and that's it's a positive thing, obviously. So also the other product that did pretty well for the month is, we take a look at it. When it comes to I guess you want to call it the equity universe, and there's no doubt Bitcoin is an equity. And there it is there. We started the month off, we were down in the 18,000 area. This product has made it to 21. I thought I saw like 21 even higher on Bitcoin the back month. The back month got even higher. But what you're seeing here is we've seen this thing was down to 17,700 and change. And it got up to 21,000. So 4,000 point move is even better in this than the Dow Jones Industrial Average. This was the big performer for the month. Going from the lows here of 18,000 and then doing it again in the middle of the month and then making up to 21,000. They're competitive without a doubt. You're talking about, that's some good action. And we were in a weekly buy for a second week. So we'll see. We switch out of this today and we go into the November contract. So we'll see how that plays out tomorrow. See what November is looking like. See if it gives us a different flavor. Matter of fact, let's do this. No, we'll do it later on. That's all right. Because we're running out of time here. So that's the action today. And I guess we got to come up with a title. And I think the best title of all has been the fact that the equities are anticipating the market, really anticipating the election. I think that's the best way to describe it. Anticipating the election very well. So let's put that in there. Where's it at? Right there. There we go. And traders, we will see you all tomorrow. Same time, same channel. We go and look at anything. But remember, if you want to see something else, just shout it out and we'll go after it. So this is Doc from North America saying happy trails to you until we meet again. Happy trails to you, to all our trading friends. All right, traders, have a safe and smart trading day. Ta-ta for now.